Right. Let's look at a company. I guess we're going to start off with Brinks today, right? Brinks, the big security and protection services company. Their symbol is BCO. And you see this all over. You see the trucks just driving around, and they have a lot of other services as well, which I know you'll kind of give those also. But let's take a look at Brinks. Again, symbol BCO. Short on the float side is only 2.7, so not much there. We do see that the PE ratio is a little bit high, 30.4. Actually, it is high, 30.4 versus 23, but price of sales does look good, 1 versus 1.6. Price of book value very high, 18.5 versus 3. We do see price of cash flow, 8.1 versus 12.3, and the PEG ratio very good, 0.6 versus 31.4. Now, Brinks has done a great job growing their earnings over the last year. They're up 48.3% versus 6.9%. Again, we talk about understanding that number because they could have very low numbers the previous year, and then this year was back to normal. So understand these numbers by looking at the income statement, the profit and loss statement to make sure where those numbers are coming from. We do see sales are up 3.1% versus 4.9%. The 5-year earnings per share growth estimate from the analyst, very good, 23.4 versus 5.7. Now, they do pay a dividend, not very much, about 0.9%, using 25% of their earnings to pay that out. Taking a quick look at the balance sheet, current ratio 1.5 versus 2.5, but I'm okay with that. Strange thing here, debt to equity 16.1 versus 1.3. I'm trying to think why. It's not a franchise company. I'm not sure why that is so high. I'll try to look at the balance sheet when you kind of look at things as well, Chase. They do have a net profit margin of only 3.3% versus 7.2. Return on equity is 63.4 versus 14.2, so that tells me perhaps they have very low equity and maybe normal debt. Maybe that's the situation, but we'll check that for you. And then we do see free cash flows only $418 million versus about $1 billion for the industry. So some concerns. What do you got going forward?
Well, they do provide cash and valuables management. We know about the trucks. We know about the guards, the security. But the other thing is they have ATM managed services. So this looks like cash replenishment. So I don't know if they hold cash and then maybe that they like replace it. There could be something that has to do with the balance sheet, like treasury management, cash forecasting, cash optimization. If they're like kind of borrowing and then lending money short term or something, it could skew the balance sheet. So just kind of looking through that was interesting. Obviously, they do transport other valuables such as diamonds, jewelry, precious metals, things of those.
Did you say you looked at the balance sheet?
No, I didn't look at the balance sheet, but I'm just saying that whatever you look at the balance sheet, it could be skewed because of their services that they offer. The other thing, too, I was going to say, when I look at this business, I do wonder if cash becomes less common, will this have an impact on the business?
I was thinking the same thing.
Yeah. So, but let's look at the numbers first to kind of see if there is any value here with the Brinks company. Their ticker symbol again is BCO. Current price is $119.45. 52-week range. I mean, gosh, it's done good. The 52-week low is $80.10, and the high $122.50 so far year to date. The stock is up over 28%. Going forward for the business, we go out to December 2026. I see estimated earnings per share here of $9.17, gives us a target sell price of $152.22. So, I mean, it trades at a forward PE of around 13 times, and pretty soon we would be shifting out to 2027 as well, looking for decent growth that year as well. So, I mean, the valuations actually don't look too shabby for this business.
And actually, I did look at the balance sheet. The assets they have about $6.9 billion. Their liabilities are pretty high at $6.5 billion, so it gives you equity of only $269 million. And they do have a high amount of debt. It's about $4 billion. So they're carrying a lot of debt in the balance sheet. But, there could be reasons for it. And this is where we can kind of give you some numbers where we say this is not the end of the research. It's the beginning. Because there could be, what was the target sell price? How much do we have?
Is it like 152.
And where's the stock at now?
119.
So we got 30% potential gain there?
It's about 28%.
28%. Yeah. I don't know. I mean, worth maybe watching.
Well, as I said, we're going to flip to 2027 earnings here pretty soon as well.
Yeah. And you brought up the cash, though. That's something that could be a concern.
Yeah.